What is stock trading? Introduction. Before you study the ways on how you can turn the stock market into a gold mine, you should first have a good foundation of the basics of investing in stocks. Throughout the course, you will learn some of the most simplistic concepts and beliefs about the stock market. If you are new to this subject, you got to start somewhere with an open mind. Topics to be covered. Stock market. Stock market index. Short-term versus long-term investment. Stock investing versus trading. Investing in stock. Stock market. A stock market, to say the very least, is a place for buying and selling stocks. It also acts as an indicator of the economic cycle. When the economy is doing well, the prices of stocks tend to increase in the market, generally. However, when the economy is down, you can also expect the prices of stocks to decline. This can be true even for a very good stock. It is also worth noting that the prices of stocks primarily depend on the performance of the business. When a business is doing well, the price of its stocks will also tend to increase. The opposite would happen if the business is not earning well. Now, the question remains, why do businesses offer stocks? The reason is that it helps businesses to raise funds in order to finance their projects, whether for the expansion of the business, or for their day-to-day activities, or just for the sake of it to keep their stakeholders happy. Money, after all, is the lifeblood of every business. Stock. A stock, also referred to as a share, signifies ownership of a company. When you buy stocks from a company, you get to exercise rights of ownership of the company, such as a claim on the company's earnings and assets, as well as voting rights. Take note that there are many kinds of stocks. The buying and selling of stocks, shares and equities works in a similar way to a marketplace, where parties negotiate a price at which to exchange an asset. Institutions known as stock exchanges facilitate the exchange of publicly listed shares. This requires a company to have held its initial public offering, IPO. When you buy or invest in shares, you are purchasing the underlying share itself and seeking to hold it over the long term. If a company grows and its value increases, then the value of its shares will also rise, and you can sell your holding for a profit. In the meantime, you would receive dividends and voters' rights. However, if the company decreased in value, the share price would also fall, and positions may result in a loss. Stock market index. When people talk about stocks, you may hear them talk about how the market rises or falls in a day. However, when you take a look at the stock market, you may see that not all of the stocks rise or fall on that day. The way to understand this is to know the stock market index, or indices, plural. There are many stocks listed on the stock exchange. Similar stocks are grouped together and formed an index. The way these stocks are grouped together may be based on capitalization, industry, company size, and other factors. Since they are grouped, any change in the value of the stocks that belong to a particular index will affect the value of the index. Having an index is a good way to sort the different kinds of stocks in the market. After all, the stock market is composed of so many stocks. It will be chaotic if you do not sort similar stocks together. It is also a point of reference for comparison. You can compare the trend of the index value with the trend of the price of particular stocks that belong to that same index. You can also compare one index with another index and see which industry may be a profitable investment. How the stocks are grouped together determines the type of classification of the index. An index can also be grouped based on the method used to sort them based on price. In a price-weighted index, the price of each stock is the only thing that is considered to determine the value of the index. Therefore, any change in the value of any of the stocks that belong to the same index will cause a corresponding change to the value of the index concerned. There is also what is referred to as a sector index. This will allow you to benchmark a particular industry or sector. A sector index is formed by assigning a particular industry classification based on the business of a company. Companies that have the same principal business are then grouped to form a market sector. There are other indices that you can find. Just take note that indices are based on how they are classified. When analyzing the stock market, it is good to study different indices so that you can have a better understanding of what is really happening in the stock market. Short-term versus long-term investment. You are free to choose how long you want to invest in the stock market. There are many traders who invest only over the course of a single day. Hence they are called day traders, but it is also normal to find people who invest in stocks for more than 5 years. This all depends on your preference, as well as how you want to approach the stock market. There is no hard and fast rule as for when to classify an investment as a short-term or for a long-term. Some investments begin as a short-term, but then turn into a long-term in the process. For starters, most people define a short-term investment as any investment that lasts for a year. Hence, all other investments that last for more than 1 year are considered a long-term investment. Again, such a definition is entirely up to you. It is worth noting that the stock market, in general, does not fluctuate too rapidly. Therefore, you cannot expect a big return on a short-term investment as much as you can get from a profitable long-term investment. Many short-term investments only last for a month or a few months. The challenge with long-term investing is that it is more difficult to predict how the market will respond over the course of your investment. Even though the market is doing terrible today, it can do well after a year. Of course, the opposite can also happen. The purpose of the investment also matters. If you want to get quick cash, then you can aim for a short-term investment. But if you want to invest for your retirement, then a long-term investment is the way to go. Stock investing versus trading. On the one hand, trading implies a more active approach. In fact, you can trade multiple stocks on a single day. This usually involves a continuous process of buying and selling stocks for a profit. On the other hand, investing implies a less active approach, where you buy certain stocks and hold on to them for a longer period, so that you can sell them afterwards for a profit. Trading implies a series of short-term trades, while investing usually takes a longer period. It is to be noted that this course uses both words synonymously without any regard to any technical significance. After all, before you can trade anything, you first need to have money to invest in your business. And when you invest in stocks, you also have to sell and trade them afterwards for you to earn an income. Short-term investing also includes the behavior of day traders who trade stocks within a single day. Investing in stock. Although anybody can invest in stocks, this kind of investment is not for everyone. If making a profit is your intention, which it should always be, you have to earn it. True professional investors spend hours of research and study on a regular basis. Yes, you can make money in the stock market by simply relying on mere luck without any research whatsoever. However, you cannot expect to make a continuous stream of income by simply relying on mere luck or guesswork. To make the stock market a profitable place for you and your business, you need to dedicate serious time and effort into learning the craft of investing in stocks. This means that you should be willing to spend hours of research and be sure to follow the stock market on a regular basis. Summary. In this module, we have covered the following points. A stock market is a place for buying and selling stocks. The prices of stocks primarily depend on the performance of the business. The stocks are grouped together may be based on capitalization, industry, company size, and other factors. Most people define a short-term investment as any investment that lasts for a year, and all other investments that last for more than 1 year are considered a long-term investment. To make the stock market a profitable place for you and your business, you need to dedicate serious time and effort into learning the craft of investing in stocks.